When it comes to number of sales and volume, the homes priced over $2 million broke from the rest of the market and still keeps rolling. Hi, this is John James with the James team at RE/MAX Partners, and this is another edition of the Steamboat Market Update, April 2022 Luxury Edition. And surprise to me, and likely to you as well, the luxury market is bucking the trend of the rest of the real estate in Steamboat, and here's how. First, median sales price. While the other price segments were up in this category, this segment was the only one up by double-digit percentages. Price increased by 18% over last April to $2.9 million. And here's my take on why. Last year, we were seeing more listings just starting to break through into this segment. And because there were so many new listings, just over 2 million, and there was no ceiling on this price segment, it pulled the overall sales price down. But now, while there are fewer listings coming on the market, they are entering well beyond that $2 million price tag. And here's where it gets really interesting. The number of sales went up compared to last year, and by somewhat significant amount, 7%. The other price segments, they all saw decreases, but here sales went from 109 to 117. And with that, the sales volume also increases. It's up by 7% as well. Sales went from close to 344.5 million to almost 370.5 million. And this is a different outcome from the other segments, while the underlying conditions still remain the same. For example, inventory. Fewer new listings by about 4% compared to last April, 159 down to 52. And the rolling average of active listings also dropped considerably, 64 to 46. That's a drop of 28%. And the listings are just not lasting on the market like they used to either. 37 days compared to 57 last year, a decrease of 35%. And while that might seem like a long time when you look at other segments, when you consider that 2 years ago the days on market was 129, that puts it into perspective. And month supply, the time it would take to clear out all the inventory, dropped 58% to 4.1 months. And again, look at 2 years ago. That supply was 20 months, and it was 30 months 3 years ago. So the luxury market is hot. Now the sales to list price ratio on the top end of the market has normally been a bit lower than the rest of the market, but even there, the gap between list price and sales price has gotten narrower. It's up 0.8% to 96.8%, meaning while there's still room for negotiation at the top end, there's just not as much leverage for the buyer as there used to be. And price per square foot is at a staggering $650 a foot compared to $575 last year. And that can be easily attributed to the fact that this segment is where most we've seen in new construction. These costs have gone up considerably, and that gets passed on to the new buyer. Price reductions didn't really tell us much this month since they were equal at about 3. But another indicator which bucked the trend was pending listings. Pendings increased in April for the luxury market by 2%, meaning we can expect strong sales for May year over year. Now, I don't believe this is sustainable for the luxury market purely because the lack of inventory will soon catch up to sales. But for now, the luxury market is where it's at. And if you like this video and want to know more, call or text me at 970-846-0797. Email me at johnjames@jamesteamsteamboat.com, or just leave a comment in the video. Let's look at type segments next, starting with single-family homes. Until then, take care.